Welcome to TheoTrade. This is Don Kaufman. Here we are. It's September 20th, 2017, doing the Theo Night video. Well, we got to hear from Janet Yellen today with the FOMC committee. Ultimately, what did they turn around and say? Well, they're going to start to unwind that $4.5 trillion, which is quite difficult to say, but $4.5 trillion balance sheet. That unwinding will start in October. Nevertheless, how did the markets ultimately react? Well, we know that there's still a glimmer of hope of volatility left in the marketplace. Ultimately, just to display to you what went on, right here is the announcement from the FOMC. Now, this particular announcement was, hey, we're not going to change interest rates. Well, surprise, surprise, nobody thought they were going to change interest rates. Nevertheless, the market actually proceeded to take a dip at that time. All right, so what are we looking at over here? It's a whopping 10-point move inside of the S&Ps, but the real brunt of the volatility wasn't actually felt inside of the S&Ps. It was very much Nasdaq specific. At the exact same time and time frames inside of the Nasdaq, you can see here's ultimately that announcement. Okay, and again, kind of continuation to the downside, but the Nasdaq was trading right and around the range of 59.75, came all the way ultimately down to 59.35. So again, the volatility being seen in the Nasdaq, which makes a lot of sense. Why was the Nasdaq substantially weaker? It's specifically because of Apple. And again, just to point out, you know, the fact of the matter is, I don't think we would have seen this kind of volatility inside the Nasdaq if it had not already been for Apple kind of chopped out one of the legs of the Nasdaq early on today. I'll come back to Apple here momentarily. There's the closing bell. But let's go back to the Nasdaq for a moment and the S&Ps. So the markets, you know, they listen to the FOMC. Then Janet Yellen does a press conference. The press conference, nothing big to see here. Markets ultimately revert back up. In fact, the S&P futures, after at one point being down to 24.94, they rallied all the way back. The S&P futures, there was again a glimmer of hope of volatility. The S&Ps were down 10. They bounced all the way back and are going to end the day, for the most part, massively unchanged. Volatility doing nothing out there. Bonds also saw some decent volatility but rallied back. The big mover on a percentage basis today, though, happened to be the XLF. Talking about a reaction to what the Fed ultimately said. Why the announcement of not changing interest rates impacted the financials this much is really beyond, I think, any trader. I've been talking to a few traders here in the in the last hour of trade today, and there was no real formal statement that was released here when the Fed initially came out. Remember, the differential was here's where the Fed announced for the most part, nothing. They did not hike interest rates, and it was at 11:30 Pacific where Janet Yellen ultimately did the speech. And again, it was, really unforeseen that the financials shot through the roof here in a matter, and this is 1 minute candles, in a matter of just about 4 or 5 minutes, we had over a 20-cent move to the upside inside of the XLF. Again, that came in to a degree as the day progressed. The bonds rallied back. The financials cooled off just a little bit. So that's just kind of laying the groundwork. We did again see some decent volatility inside of today's trading session, but as I said, kind of finishing massively, unchanged for the day. Now let's get to Apple and what could be some opportunity. So Apple had a number of rough reports that came out throughout the course of today's trading session. There was one report that ultimately said, all right, Apple, the sales, are not going well of the new iPhone 8. All right, that's one of the reports. Now, those sales are based on some analyst research over there. Okay, there's nothing to substantiate that just yet. Okay, then there was a couple of software problems with their brand new watch that's supposed to be, cell phone watch. Then there's actually some problems with the new iOS 11. So there's a lot of negative news over here. The impact okay, was still ultimately what I believe to be fairly negligible at this point. One interesting aspect of this, so again, Apple finishes down about 1.7%. One really interesting aspect, if you look on a longer duration chart and kind of zoom in over here, what you will see is Apple hitting what can only be described as an extraordinarily key inflection point here, which happens to be right in the neighborhood of about 154. So if you're looking for the idea of like, all right, so how am I going to build this into a trade over here? Okay, I typically don't like to do what's called shorting into the hole. And what that means is that Apple's been down fairly substantially. You know, you don't want to necessarily step up and short into this hole. Why? You short into the hole and what happens? It rips right back up, okay? Rough position. However, okay, this threshold level here of right in the neighborhood of 154, if Apple starts to crack below 154, I think that we're going to get some follow through and some sell side activity specifically into Apple. Another aspect, if you don't like, again, you know, shorting when we actually crack through that 154, and again, I don't necessarily suggest that anybody go out there per se and short the stock. I do happen to have a short position in the stock in Apple. Nevertheless, you can probably construct this very effectively in terms of a short position. Not shorting the stock, you could go out there and short the options. How can you do that? You know, as Apple starts to crack into the 154 range, right, we would probably go and build an in-out spread. Okay, and we can give examples of these in-out spreads. It doesn't have to be an extraordinarily high-risk trade. Here's a $2.50 wide spread for about $1.22. This is what I mean by, you know, creating like a short position. Again, you don't have to go out there and short what is a $156 stock. Obviously, if that blows up on you, it's, you know, Apple's capable of moving, what, $5-10? I mean, you don't have to look much further than today to see it move from 158 all the way down to 153 and change. Again, we're looking at, you know, the capability on a one-day basis of moving $5. Granted, today was extraordinarily volatile. If you don't like the Apple position, I've also been keying into Google a tremendous amount. Google has a similar situation, okay? It's trading in an incredibly tight channel. And today's trade specifically, we saw traders, okay, diving out of Apple and specifically into Google. And you can see Google popping right now and ended the day about, you know, 1.1%. So Google's got a little bit of a pop. My belief in this particular circumstance, though, is that if Apple crests under 154, yeah, again, maybe you don't want to necessarily, you know, short Apple into the hole there, but if Apple crests through 154, I think it'll actually take Google down along with it. So rather than place the Apple position, go out, and again, I think this capital rotation will end if, in fact, Apple breaks through the 154 level. And that capital rotation, that is out of Apple into Google, well, if Apple breaks through 154, they may say night-night to the Nasdaq for the time being, and Google, okay, in my estimation, is the prime place that you want to be as a trader. And again, elevated volume today. How would you create a short position inside of Google? Very, very similarly to what we just constructed inside of course, Apple. And that is, you know, here's an underlying trading right around 947 and change. Well, in this circumstance, we're going to go ahead and we're going to use, okay, a $5 wide spread. This is a 950, 945 put spread for about a 245 debit. Now, granted, you'll have to reprice these types of trades, okay, in and around when the market kind of suits the trade, meaning that when Apple cracks to 154, we're not going to be sitting around here at about 950 on Google. So you're going to have to reprice, okay, and restructure the correct strike prices for the trade. The whole idea, though, here is to mitigate your risk. You can't lose more okay, then about $2.45 in this trade. We're trying to make about 55%, okay, of the $2.45. And if you look at this from a probability standpoint, I'll throw up what's called probability of touching, okay? There's an extraordinarily high probability of touching the 945 strike. Now, that does not necessarily indicate that you are going to make money. Nevertheless, I like taking the Google stance rather than shorting into the hole specifically on Apple. Thanks everybody for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.